If you are a veteran with a VA loan and want or need to sell this property, then a VA loan assumption may be an alternative, especially if you have a low interest rate. Okay, so now let's get into it. What is a VA loan assumption? It is when you transfer your VA loan to someone who can qualify for the loan or meet the financial requirements of the lenders. So instead of the buyer obtaining their own new mortgage, currently at higher interest rates, you simply transfer your mortgage, your interest rate, and monthly mortgage payments to someone who is eligible to assume a VA loan. You might be wondering if the buyer has to be another veteran, and the answer is no. The person is required to only meet the financial requirements and not military requirements. To assume the loan, you must meet three conditions. Number one, you are able to meet the financial requirements of the lender. Number two, you agree to assume all obligations related to the mortgage. And number three, you are willing to pay 0.5% of the loan balance as funding fee. So, how do you assume a VA loan? If you are interested in selling your home under the VA assumption, you will first reach out to your servicing department at your current lender and ask for an assumption package. If you are selling to an eligible veteran, then you can request that their eligibility be substituted for yours, and then your eligibility is reinstated. In this case, the new owner would not be required to meet financial requirements. However, they must have a minimum credit score of 620 and an appropriate debt to income ratio. If you are selling to a non veteran, then your eligibility is tied to this property until they sell or refinance this loan. As a non veteran, they must pass the financial requirements of the lender and be willing to take over all the liabilities associated with the mortgage. Let's go over some of the pros and cons of a VA loan assumption. The first pro is you don't need a VA loan appraisal. This will save you time and money, about $800. Also, the funding fee of the VA loan assumption is comparatively lower than applying for a new loan. Number two, you can claim the benefits of a VA loan, like lower interest rates, even though you're not a veteran. Number three, you can have your VA entitlement restored and use a VA home loan benefits again if you sell to a veteran and substitute your entitlement. While VA loan assumption does have pros, there are also some cons, and they are number one, you can only assume for a primary residence, no second homes or investment properties. Number two, if your buyer is a non veteran, you will not be able to restore your entitlement until the mortgage is paid in full. Number three, some lenders don't have automated authority. This means that your application would take probably a little bit longer. And number four, your credit score might be affected if you do not opt for the VA release of liability and the seller fails to make the payments on time. If you choose to sell your current home under the VA assumption, I highly recommend, and I mean highly recommend, that you request the lender to process the paperwork for VA release of liability for you so that you do not have credit issues in the future. If the new buyer runs into hard times, you don't want your credit affected by their late payments. For more information on VA loans, you might want to watch this video where I talk about the disadvantages of VA loans.